Hello, and welcome to the Santu Pirls Market Commentary, Market Week ending Friday, March 8th, 2013. Market Breadth. With this past week's market advance, our bull-bear point and figure ratio rose from 1.81 to 2.15, advancing further within strongly bullish territory. The total count of securities in bullish or bearish patterns increased 5% to 2,390. The count of bearish stocks decreased 6%, while the count of stocks in bullish patterns increased 11%. The Santu Pirls PNF Market Breadth Summary Chart shows us a market now 11 consecutive weeks in bullish territory. Paid subscribers have access to the Excel data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking on the Membership tab, and clicking Sign Up. For those who would like to give trend following a dry run using the S2P Market Signal, there is a 2-week trial period, which you are invited to participate in. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 91 points for the 13th rise in 24 weeks. At a positive 513.63 points, it remains above the November 2010 top, the January 2011 top, the November 2011 top, the September 2012 top, the November 2011 top, the July 2012 top, the June 2010 bottom, the March 2011 bottom, the June 2011 bottom, the August 2011 bottom, the December 2011 bottom, the March 2012 bottom, and the November 2012 bottom, but still remains below the February 2012 top, and now also the February 2013 top. Volume analysis. In this week's volume analysis, the Russell 2000 ended in accumulation mode. In the last 2 weeks, it had 3 accumulation days and 1 distribution day. Of the other indexes, both the S&P 500 deposit receipts and the Diamonds Trust ended in accumulation mode. Accumulation days are counted when the index closes up on higher volume than the prior day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week also, the Russell 2000 ended the week in accumulation mode. Momentum. As of the Friday 3/1 close, the CCI 20 daily had 6 days below zero to begin a Woody's downtrend. That same day, we received a Woody's zero-line reject short entry signal within the plus or minus 50 range, going short with a simulated trade at Monday 3/4 open. At Monday 3/4 close, the CCI 20 daily had reversed above the zero-line reject pivot, so we exited the trade at Tuesday 3/5 open for a loss of 15.92 points on the Nasdaq Composite, or 29 cents per share of QQQ. Can't win 'em all. The CCI 20 daily now has 5 days above zero and is likely to go back to a Woody's uptrend on Monday 3/11. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 4 weeks ago, while the daily CCI 20 began a Woody's downtrend 1 week ago. The CCI 20 weekly now has 10 weeks above zero and began a Woody's uptrend 4 weeks ago. At 114.67, it is outside the plus or minus 50 range for a valid zero-line reject signal. Industry rotation the last 2 weeks. All of the top 5 industries are fractionally positive, and only one of the bottom 5 industries is negative. Bullish, banks has entered the top 5. S&P retail remains in the top 5. Gold and silver remains in and continues to lead the bottom 5. Disk drives and networkers have left the bottom 5. Oil services continues in the bottom 5. Bearish, REITs has entered the bottom 5. Focus this week, quote, "The reality or the anticipation of the dollar collapse obliges the world to reorganize on new fundamentals," end quote. It seems that the U.S. and Europe are moving closer to the Icelandic model of financial reform, as the February 16, 2013 issue of the Global Europe Anticipation Bulletin explains. Very interesting reading. We live in interesting times. Thank you for listening to and observing this week's Sand to Pirls market commentary. We hope that you had a great week last week, and we hope that you have a great week coming up. Happy trading!